As the cryptocurrency market loses $27 billion, Dogecoin and Cardano lead the decline. Cryptocurrencies like Dogecoin and Cardano have had a great start to the new year despite the substantial losses experienced by the markets. Some of the biggest cryptocurrencies on the market have had a rocky period of volatility. Dogecoin and Cardano led the market decline, which saw a loss of over $27 billion overnight in the cryptocurrency space. Why then did cryptocurrencies cool down after a strong 2023 start? What happened? After a great surge this year, the cryptocurrency market has paused, with the price of Bitcoin, the most valuable cryptocurrency, dropping down to about $22,500 after briefly crossing the $23,000 barrier earlier. Ethereum, the second largest cryptocurrency, has traded around 4.5% lower. Shiba Inu and Dogecoin, the two significant meme tokens, had their prices fall by about 5.6% and 5.3% respectively. So what? There's a lot going on in the world of cryptocurrencies right now, but in my opinion, two things are having the biggest effects on market movement: macroeconomic considerations and the repercussions from FTX and the following crisis of confidence it has brought about the sector. Since other crypto enterprises had exposure to FTX and investors lost faith in the company after what looked to be widespread fraud brought the company down, the company's bankruptcy caused a lot of crypto contagion throughout the sector. Since then, the sector has been beset by bankruptcies and layoffs. Luno, a London-based cryptocurrency exchange owned by Digital Currency Group, said that it is laying off 35% of its workforce. Broader economic variables, such as what will happen to the business and the trajectory of interest rates this year, are yet another problem that is probably more to blame for the surge in cryptocurrency this year and the collapse today. It's excellent news for crypto that inflation is showing signs of slowing down, since it may allow the Federal Reserve to terminate its rate hiking program sooner rather than later. Riskier assets like cryptocurrency were increasingly undesirable in 2022 due to skyrocketing interest rates. Thus, the prospect of a stop to rate increases is likely what has sparked this year's crypto rebound. However, many analysts and investors believe that the U.S. economy will enter a recession, prompting the Fed to lower interest rates and foster a more risk-on atmosphere for stocks and cryptocurrencies. This suggests that the market may be getting ahead of itself. However, it is still unclear if there will be a recession, which would create the possibility of a rate decrease. Although the majority of analysts do anticipate a recession, the job market is still relatively robust, and the economy may do better than many anticipate. If this occurs, there won't be a rate increase and rates might still stay the same or even increase for a longer period of time. Former Federal Reserve economist and head of SAM Consulting, Claudia Sam, the signals are muddled in a way that we haven't seen previously. People claim that historically when this occurs, that also occurs, and then there is a recession. Although that's a fine place to start, the analysts shouldn't end there. So what? Cryptocurrency will likely remain volatile until there is more clarity, since there is so much ambiguity around the economy and the future course of interest rates. It very well may drop once more before gaining traction. I also believe that the FTX crisis and the crypto contagion must resolve itself before investors can resume feeling secure. However, considering the use of smart contracts and recent network improvements made by the developers, I do see a promising future for Ethereum. Even while I'll be keeping an eye on Shiba Inu's performance once Shibarium is released, I still have no interest in Shiba Inu or Dogecoin.